Good morning, everyone. Tim Nyland here. Today is Wednesday, April 7th, and this is our weekly strategy call for Zacks Professional Services. Each week, we focus in on what's moving the market. If you have a topic you'd like me to explore in a future video, please leave a comment below. You can check out previous strategy calls on our channel, and you'll also find many more videos on investing and making the most of Zacks Pro platforms. And don't forget to hit the subscribe button below to make sure you never miss any of our future calls. Today, we're going to take a look at the ISM Manufacturing and Services Index. Specifically, we're going to take a deeper dive into some of the components and, most important, some of the trends and what it means for the markets. Today's webinar was obviously triggered by the news that broke last week on the March read for the ISM Manufacturing Index. And when I started looking through the Wall Street Journal, I found it interesting that there was literally one blurb about this record-breaking ISM number that deserves so much attention. And the interesting thing is it's not really getting the attention it should, and I'm going to show you why. The Institute of Supply Management publishes the Manufacturing Index and the Non-Manufacturing or Services Index at the start of each month with reads for the prior month. They are probably some of the best leading economic indicators out there. And the firm is located in Tempe, Arizona, and they conduct a monthly survey. And it's a very simple survey, but extremely, extremely effective. And I've got the Wall Street Journal article up on the screen so you can see it. And you'll see that when I'm doing my research, I often make little notes. This one, I was shocked that actually had no chart and very little information about, the ISM Manufacturing Index relative to its history and a lot of the other important factors involved with the ISM read itself. So we're going to go through this today. Obviously, earlier this week, we also had the Services Index get published for March, and that was also a blowout. So let's take a look at what these two look like from a chart perspective. And again, I'm using the Zacks Research System. I've got a 1 to 4 panel chart, obviously only 2 panels. The top panel is that ISM Manufacturing, that Purchasing Managers Index. And the bottom chart is the Non-Manufacturing Index, or what we call the Services Index. And what I want to do is call your attention to the areas post-COVID highlighted here with the red box in 2020 into 2021. And you can obviously see those blowout reads. We certainly haven't had any reads like this since the Great Recession. And we're going to take a look at much deeper histories here in just a minute. But with regards to that ISM Manufacturing Index, that Purchasing Managers Index, we haven't had a read this high in 38 years. The very, very important part of this is that I want you to understand that these indices are cyclical. And this is basically, obviously, a gauge of the status of the U.S. The manufacturing economy, so the industrial economy. And the interesting thing is when we start talking about the cyclical rotation, I was commenting on this back in June, July, August of last year, and have been on a regular basis, noting that cyclical rotation actually started right at the recovery period here of COVID. You can see that. I'm going to show you here in just a few minutes what this means in terms of its correlation to our cyclical portfolio. But they remain highly, highly correlated. So in terms of any sort of cyclical rotation, again, it started here back in May, June of last year. And then obviously the COVID vaccines announcement here, and then that next leg, including the deficit spending related to stimulus and other factors pushing us to all-time highs. Same thing for the Services Index. So this is something that we definitely want to pay attention to. Because there are implications here for where we head next, and that's what we're going to look at. So when we think of ISM, I want you to think of the 10-year Treasury, and I have an interactive chart from the Zacks Research System up on the screen to show you just that. And what I want you to see is the longer term trend of correlation between the ISM Manufacturing Index and the 10-year Treasury. And the most important part of this is that the Federal Reserve and Fed chairs and everybody looks at this thing. Anything below a 50 is economic contraction, okay? And you will see that if you were to plot Fed stimulus and Federal Reserve action against the ISM Manufacturing Index, anytime we dip below 50, they make accommodations. And you can see this trend in the 10-year Treasury, how it more or less mirrors this ISM Manufacturing Index. And so as you've seen in prior webinars, I kind of like to pull out my trend lines and just draw some really naive charts here so that you can kind of see what I'm seeing. And specifically what I want you to look at is this period post-Great Recession. But obviously the trend is valid all the way back as far as we have history. But you can see as that ISM rises, so does the 10-year yield. And then obviously as the ISM collapses, the 10-year Treasury yield tends to collapse as well. So if we've got any indication at all as to ISM being a leading indicator of the 10-year, you can see this run that the ISM has been on, and it's obvious where the 10-year Treasury yield may be heading again. It's a really, really good leading indicator. We've got obviously the Fed standing by, promising to allow the economy to run hotter and keep rates low. But at some point, the credit markets might take it upon themselves to actually continue to march this 10-year yield even higher. So that's something we're going to want to keep our eyes on. And this is obviously one of the things that I look at as a portfolio manager and strategist. When I see these ISM reads, the first thing I think about is what's going on with the 10-year Treasury, and you should be looking at this as well. The next thing I want to bring your attention to is the correlation between cyclical stocks and the ISM Manufacturing Index. And this is something that obviously I've been preaching about since, again, May of last year, since the bottom of the COVID crisis. When we start talking about, getting exposure to cyclicals, there's been all these calls up here by JP Morgan, Goldman Sachs, now's the time to get exposure to cyclicals. Yeah, I mean, I agree, right? Because they've run from here to here, but, you could have gotten exposure to cyclicals right along with growth exposure back here at the bottom of COVID and done really well as well. So the timing of this is best observed through the ISM Manufacturing Index as well as the Zacks Cyclical portfolio, and relying less on those sell-side banks to tell you, hey, now's the time to invest in cyclicals. You can pretty much read the ISM Manufacturing Index at these bottom points once we start getting confirmation of a turn as your best point, or as your leading indicator to start getting more exposure into cyclicals. So anyway, keep in mind the Zacks Cyclical portfolio, part of the earnings certain family. It's actually one of the portfolios that feeds into that earnings certain family. Remember, we have the standard industrial proxy of 400 stocks. We split that between an even number of 200 growth stocks and 200 cyclical stocks. This cyclical portfolio is that portfolio that mirrors that ISM Manufacturing Index. So those 200 names are available for you to look at. We make those names available in advisor tools as well as the research system. And for anyone who wants a copy of this slide deck, it's obviously made available each week. At the end of this webinar, there will be contact information. Feel free to reach out to us and our world-class support, and we'll get you a copy of this deck. Okay? So again, like to draw those trend lines. You can look at these trends. They are, again, throughout history. The cyclical portfolio has always mirrored the ISM Manufacturing Index long-term, and specifically since 2014, those correlations have become almost one for one. I mean, it's incredible how much since 2014 the cyclical portfolio mirrors the movement in the ISM Manufacturing Index. So 200 great companies for you to look at in advisor tools that as a group mirror this ISM Manufacturing Index. What we're going to do now is we're going to shift our focus away from some of this leading type indicator analysis, and we're going to look at some of the trends that I want you to be aware of with ISM. This series is so important that we need to understand what happens once we start breaching this 65 mark. And so what we're going to do now is we're going to look at this series from 1996 forward, and then we're going to bring the full series into light so you can see the cyclicality of it and some of the trends. But the one trend I need you to be aware of is the one that took place from 04 to 08. And this would be the trend that I would look for as we move through 2021 and into 22 and 23. As a matter of fact, Jamie Dimon actually came out and said this morning that he feels as though this economic boom that's been created from deficit spending and all the vaccines could very well run into 2023. And from an ISM Manufacturing Index perspective, this is what that trend looks like. And the reason this is so important is because when people see a downward trend, they think bad. And when you're looking at ISM, the only time I want you to think bad is when this read falls below 50. So you can see the 49 mark, 50 would be about right here. Okay, this is all expansionary, albeit slowing down, it's still expansionary in nature. Okay, and so when you hear Jamie Dimon talk about the fact that he feels as though this economic boom is going to last through basically 2023, from an ISM Manufacturing Index, this is what we would look towards in terms of trends. So imagine this peaking out. You'll see that we're at record highs. At some point, this has to peak, right? Because this is a cyclical indicator. And I would look for this trend to start slowly falling down, just like we saw here in 04. Now, when we bring this chart back, and you can see why I wanted to stress from 04 to 08, because you can't see it as well in this longer term chart that runs all the way back into the 1950s. But here's that 04 to 08 trend that I would look for. But keep in mind, what I'm going to do is I'm going to advance to the next slide. And what we're going to do is we're going to draw basically a horizontal line across here. You can see that red line now. And you can see that this is the highest read we've had for the ISM Manufacturing Index in literally 38 or so years, all the way back to the early 80s. This is huge. And even more so, what I want everybody to pay attention to is the fact that when we hit these peaks, we tend to not stay there very long, right? That's the cyclicality of the economic cycle itself. And that is the beautiful thing about the ISM Purchasing Managers Index. That read is a really, really good pulse of that U.S. manufacturing economy. And it gives us an idea of exactly what's going on in the economy. And again, the Federal Reserve looks at it. Everybody looks at it, and you should be too. And the reason is here. So I've basically drawn a green horizontal line at that expansionary versus contractionary period. So anything below 50 is contractionary in nature, and anything above 50 is expansionary in nature. So again, once we breach that 50 mark, the Federal Reserve, you'll notice, gets very accommodative in their policy, even more so than they were obviously during the expansionary period, to bring that economy back to where it's expanding, at least on the manufacturing side. And what I want you to see here is that when we look back through history of ISM, when we get these extreme reads, basically an extreme read is anything over 60. When we get these extreme reads, they tend to peak quickly and then drop. And in many cases, we end up in a recession. Now, hear me out. I'm not saying we're heading into a recession, okay? By all means, no. We just got out of one. But it is interesting to note these trends, that once we get this economy really hot, right, inflationary pressures set in, Federal Reserve takes action, and eventually we lead back into another cycle. We have a recession, and then we get the buildup again, and then we hit a recession. These gray shaded lines are your recession periods. So you can see we go from peak to trough, peak to trough, peak to trough. We hit another peak to trough here in the 60s. So basically in the course of, the early 50s to 60s, over basically 15 or so years, we moved through 3 peak to troughs, 2 recessions, and then obviously the big one here in the early 70s. You can see here we peaked, we had a double peak, and then a collapse into a recession. Same thing happened here in the early 80s, although on the outset of a recession, this super, super hot economy, and then just those cycles until we had the recession of 91. So at any rate, really, really important to just understand the cyclical nature of the ISM. And again, I'm not calling for a recession by any means. I think what we're going to see is exactly what Jamie Dimon described, and just look for this ISM to slowly start tapering down. Again, anything above this green line of 50 is expansionary in nature and good. Okay, so that's what we're looking at. Again, my intent here is to educate so that you guys understand exactly how to read and interpret what you're seeing and hearing on in the media with regards to this once in a generation peak that we're at right now with ISM. Like I said, this is a 38-year high. We probably won't see these levels again for some time. So when we look at the ISM, there's a couple of components that I like to look at that actually roll up into the Purchasing Managers Index. One of them is the new orders index, right? So this is basically all the new orders that are coming into manufacturers. And you can see that we're sitting at more or less all-time highs, still a little bit of room to expand relative to where we were in 03, 04. Same thing with production. Still have production capabilities left, capacity left, but not much. I mean, we're pretty much firing on all cylinders here. Inventories have been drawn down a little bit. We've had some supply chain constraints. The most recent was obviously the Suez Canal, and obviously we can still put pressure on manufacturing prices. So those can continue to rise as well, and these obviously all speak to inflationary pressures that could continue to mount as well. So we're going to just keep our eyes on all of that. So we'll next shift our attention to the services index we call the non-manufacturing index. And I don't have as much history on this one, but we are sitting at all-time highs. And this one actually shocked me as well, because we had actually done more or less a double top and we were headed back down. And then we just literally blew the March read right out of the water to an all-time high. And so again, just taking a look at new orders, they're literally at record-breaking highs, business activity at record-breaking highs. Everybody obviously super excited about the COVID vaccines and the rate of the rollout. Everybody's getting excited about travel this summer, and the ISM survey results for the services industry or the non-manufacturing index is obviously reflecting that. So we keep an eye on this as well. Again, we get that inventory drawdown. Generally speaking, labor shortages and such, as well as supply chain disruptions were again cited. And then obviously non-manufacturing prices index continue to march higher. They can go even higher. So again, we could see these index levels even peak more than they're at now. So I'll be really, really curious to see where the April read leads, and even the May read. So we'll be keeping an eye on all of these things. So just a couple takeaways, right? So record-breaking levels of both the ISM manufacturing and services indices. I mean, this is really, really big news. I was shocked to see that the only coverage of this in the journal was on Friday, and it was just a little tiny blurb in the A section. It wasn't even in business or finance. In my opinion, it was worthy of a front page story. Do not underestimate the amount of liquidity and stimulus in the system. That being said, the ISM indices, they can go higher, right? But history shows that we may be approaching a near-term top in the cycle. That doesn't mean that it's gonna crash and end badly. Like Jamie Dimon was saying, and I've got it quoted here in point 5, the ISM can go sideways and trend down for many years, and it can still be expansionary. I showed that in that period from 2004 to 2008. And again, Jamie Dimon's quote is in here, blue. The economic boom fueled by deficit spending vaccines could easily run into 2023, and I would definitely agree with that. Remember that any read over 50 is expansionary. Anything below 50 is contractionary in nature. ISM Manufacturing Index is cyclical, remains highly correlated to the Zacks Cyclical portfolio. This correlation is key for the timing of industrial stocks directly tied to the economic cycle. And that ISM Manufacturing Index obviously remains a key leading indicator for changes to the 10-year Treasury. So just make sure that you're keeping an eye on that. It gets released for both non-manufacturing, which is the services, as well as manufacturing, the first of every month. and be looking for it in the journal. If you don't find it in the journal, just do a quick Google search on it. Just be aware. You can also obviously reference your Zacks Research System to get that information. So that's about it for this week. Thank you all for attending. If you found this video helpful, please hit the like button below. Be sure to subscribe for future videos. If you have any questions or requests, or you'd like a copy of this slide deck, please leave a comment below and email me at tnyland@zacks.com. You can also follow me on social media. I'm on LinkedIn, and my Twitter handle is @TimNyland. If you're interested in getting started with advisor tools or the research system, or you're looking to upgrade your current subscription, please feel free to just reach out to our world-class support at advisortools@zacks.com and zrs@zacks.com. Thank you very much for watching, and I'll talk to you next week.